So, hi everyone, I'm here with Mike Hutchison today, and he's the director of the Regular Payments Marketing Company. And I suppose your background, Mike, has really been sort of in the whole payment space for many years, working for banks and VocaLink. I mean, he's got a storied history, I suppose, in terms of the payment space. But thanks very much for joining me today.
You're very welcome, Chris. Yes, I don't like to talk about the year, but I joined Bax back in the very late 1980s and had a career in Bax and then VocaLink.
Yeah. So certainly lots to talk about, and I suppose to start off, I want to get a bit of perspective, just given how storied you are in the industry, is just get a bit of perspective about how much have you seen the payments industry sort of change over those years. I
Gosh,
mean, it feels like it's like night and day different. And if I think back to when I first
yeah,
started.
yeah, I think so as well. I joined Bax not actually knowing what it was. So, as a very young homeowner in those days, I was introduced to direct debit without really knowing that that was a product that came from Bax. It was very little choice in those days over payment methods. We were still using click-clack machines for cards.
Mm.
We had direct debit, we had standing orders, we had checks, and obviously we had cash. And the change between then and today, even in regular payments, the changes have just been extraordinary when I look back on it. I wrote a piece recently about direct debit sort of fell into the digital age a little bit, but through the development of Audis and paperless direct debit. But if you think what you can do now digitally in the way of paying bills compared to, getting a paper bill through the post from an electricity board as they were in those days, sticking it behind the clock on the mantelpiece until you got the red bill and then paying it with a check. So you got even longer before the money came out of your account. I mean, it's just night and day. It really
I,
is.
I mean, it strikes me that direct debit at the time was quite a way ahead of its time in some ways, because I mean we were all using paper checks. I remember using paper checks
Yeah,
and used to have
yeah.
check guarantee cards, right? And sort of, yeah, and I remember, so I was at Amex at the time, the click clack machines.
The
We'd do
click
that
clack
with floor
machines. Yeah,
limits, and so
yeah.
certain amount would never be checked and all of those sorts of things. I mean, it's
Yeah, I
really.
mean, direct debit was invented by a guy called Alistair Hanson, who had nothing to do with banking. He worked for Unilever at the time. Really fascinating guy. If you want to look him up on Wikipedia, he's a fascinating individual. But he came up with the idea of direct debit to collect money for ice cream sales for Unilever. And in his own words, it took him many years to convince the banks to develop this. And he developed it in the 60s, believe it or not, and it went live in 1970. And by and large, it's the same solution today, with the exception of things like Audis and paperless direct debit. But it's pretty much an incredible story of a guy that created something that 60 years later is still a mainstay of payments.
And I know when we were chatting before, you talked a little bit around what the marketing was in terms of like the
Mm.
rollout of that and sort of getting adoption rate, because there's quite an interesting analogy around, I suppose, the rollout of direct debit and then some of these more modern kind of payment methods that we're trying to get adoption for, because adoption seems like it's almost like this big thing we've got to try and get people on board, but no one wants to go first. And like, how do you sort of get people on board? Because then you reach critical mass and then everyone wants to be part of it.
I think you're absolutely right. I mean, I joined just after really, I mean, direct debit's been around since 1970. In the late 80s, there was a real emphasis on promoting direct debit, and it was a real sort of team effort with the banks, the billers, and obviously Bax trying to orchestrate this from the centre. And we went through a long period of TV advertising. We had to explain to consumers what direct debit was and raise awareness of direct debit, which seems ridiculously now. I mean, we stopped doing it in the end because awareness became ubiquitous. Everybody knew what direct debit was. Um, so long period of trying to raise awareness, trying to raise understanding, trying to explain how direct debit worked. And at exactly the same time as we were doing that from the centre, we were engaged with all the billers, so gas, electricity, TV license, water companies, councils, and ensuring that they were making the offers out to consumers at the same time as the TV adverts were on. So it was a real push-pull strategy, and it was built around a completely unambiguous brand. The the work that went into building the brand that's direct debit and locking it down so that in the early days, whether you were looking at a direct debit, they were all on paper in those days. So whether you were looking at a paper instruction from your local authority for your council tax or rate, if you were looking at a direct debit instruction from your gas company or your local gym, it looked the same. You had that feeling that it was the same thing that you were signing up to. It had the same wording on there. It had the same guarantee on the bottom. The logo was deliberately black and white so that it was very easy for everybody to use exactly the same logo. So a real unambiguous brand that was controlled from the middle. And you're right, I think these are all things that open banking, variable recurring payments, pay by bank, all of these new payment methods can look back at direct debit and really see a clear path as to how you gain traction.
I mean, when you go back to, I'm just thinking back to the original logo as you sort of you described. I mean, the black and white logo. I mean, it was the same everywhere, wasn't it? I mean, it's
Yeah,
on every
and it still
single,
is.
yeah, on every
Yeah.
single bill that came through, you'd see it as being consistent, and I suppose that sort of generates a bit of like branding and trust that's sort of around that. And I just
Yeah.
wonder if that's maybe something that we're missing, because now it's almost like it just feels a lot more sort of like free market, which is we're all going to try our own thing and do that. But it was that consistent branding
Yeah, I
gives you
think
the
so. And
trust, right?
I think you can look back on things like faster payments where there is no real branding of faster payments. You can look back on things like Payem and Ping It and all the various different mobile banking payment methods that have been developed around faster payments. And it's very disparate branding or no branding at all in the case of faster payments. And faster payments became overtaken by the fact that it was just an online banking payment. It didn't have an identity of its own. And I think there's been so much talk about all the different names and that are given to the open banking payment methods that are being developed now. One thing it could really do with is it could really do with coalescing around a single brand identity, and then that gives the consumers something to pick up on.
Yeah. I mean, it does feel that's sort of like a learning that seems to be missing. I mean, when you
Mm,
mentioned faster payments, I remember talking about faster payments rolling out, and it's sort of that's sort of hidden for most of us. I mean, just
yeah,
like instead of taking, 2, 3, 4 days to clear a payment, now it happens instantly, and we are like the amount we rely on it, at least the amount I rely on it. I mean, I'm literally in the shop buying something, it gets declined because there isn't enough money in my account. Okay, that's one way they already know it, and then I move the money, so then I can then make the purchase. I mean, that's happening
yeah.
in the shop at the till. And we just take that for granted these days. But I mean, that infrastructure wasn't there, was it?
It wasn't there at all. No, faster payments was a huge step forward. As I said, with the exception of maybe how the branding was dealt with, but it now underpins the whole of open banking, but also the whole of online banking. So you're right, just transferring money from one account to another is something that wouldn't have been possible without faster payments, and that's 20 years ago now. It's incredible.
Yeah. And where do we sit with direct debit now? Is that sort of that's still as strong as it ever was? And how do you think that's going to sort of change with? I mean, open banking. We'll talk a bit about open banking. I mean, that's been around for a while now, but it feels like its adoption has been slow to start. I think it's definitely been picking up now, but it feels like we're in that sort of switch over to a certain extent. I mean, and do you think one will replace the other, or where do you sort of see the environment really?
I think there's an awful lot of talk in the payments industry about things like variable recurring payments paid by bank and so on and so forth. Will they take over from direct debit? I think it's unlikely, certainly not in the short to medium term, and there's a number of reasons for that. I think you've got a product that is ubiquitously understood. It's got a robust consumer guarantee. 85% of consumers actively want to pay by direct debit. They either champion it or they go looking for direct debit to pay regular bills. You've got a whole infrastructure of billers who have direct debit built into their systems, and it works for them. And the fact that it's a 3-day collection makes no difference whatsoever. They get the money into their account, the bill on the due date in 98 point something percent of the time. So to move that out, it's going to take something extraordinary.
Mm.
That said, direct debit does not work for everybody, and it doesn't work for every billing organization. So in the same way that faster payments started chipping away at BACS payments with things like weekly payroll. So to run a weekly payroll on BACS was really quite difficult. You can do it. There's no reason why you can't do it, but you'd have to close the payroll on a Wednesday for people to be paid on a Friday. And if they're paid by the hour, you're estimating what they're going to work Thursday and Friday. So faster payments started by working through weekly payroll. The thing with direct debit and variable recurring payments is the world has moved on from where it was in the 80s, if you like, and the 90s, where most people were paid a salary on a particular date of the month. It was the same amount pretty much every month, and direct debit fitted into that sort of pattern, if you like. These days, you've got significantly more people with multiple incomes, with side hustles. You've got people with irregular incomes. You've also got, and I've always had, people who have low income and have the desire to have absolute control over when things go out of their bank account. And direct debit, you get advance notice and so on and so forth, but it's not visible to you at the point that it goes out of the account. So for those groups of people, direct debits hasn't really kept up with modern employment. And for that reason, I think there is an opportunity for open banking and variable recurring payments in particular to work for those audiences.
How much do we have to think about fee structures? I mean, we have this stuff in terms of we know about from a consumer point of view. So we know about, so we'll know about like I suppose accessibility. I mean, what that means in terms of how it appears to us. But what about fee structures, and how do we need to think about fee structures in the background? So, for example, fees for using credit cards or fees for like bank fees for making payments. I mean, are there differences there that we've got to think about that are sort of, I mean, they're almost like hidden within the industry and they're hidden within the payments industry. But how do they sort of compare? How do we need to think about them?
From a consumer point of view, banking is free while you're in credit. So how I pay a bill, whether I choose to pay it by direct debit or whether I go onto my online banking account and push a payment through, doesn't affect me at all. It does if that direct debit fails. So there's a charge to the biller if a direct debit fails for insufficient funds. And the biller may well pass that on to their customer. And for that reason, people on very low incomes are very nervous about paying by direct debit. So it affects it to that extent. But from a biller's perspective, direct debit has always been the cheapest way they can get regular funds in from customers. With the infrastructure embedded in their systems, and with the price being what it is, it's going to be a very difficult situation for things like variable recurring payments, unless, as I said, the audience doesn't fit direct debit. If a biller has a high incidence of unpaids from that particular audience, then it may be worth looking at a different payment method that at the moment there's no sort of charging structure that's been published.
Yeah. I remember some of the complexity you have around sort of, processing bounce direct debits as an example, and that could be quite, operationally complex to sort of process and those sort of things. I mean, how much of a pricing difference do you think there is? I mean, even from an operational point of view, I mean, will open banking sort of, variable recurring payments, I suppose, really what we're talking about, is that going to enable it to be cheaper, or outside of just the pure processing, the pure, I suppose, fees cost?
It's a really good question. I don't know where the vendors are going to pitch VRPs from a price point of view. I know back in the day when the banks were tendering for large biller business, they would use BACS payments and direct debits as a loss leader. So they would actually price it out to those organizations, in some cases for less than they were being charged centrally for direct debits. So it's very difficult to say what the commercial situation will be at the coalface with payments. But if you've got an audience of customers, as I said, who direct debit doesn't work very well for them, and unpaid rates are higher,
Mm.
then even if variable recurring payments are pitched at a higher cost per unit, they will become competitive.
Yeah, yeah, I suppose so. And you mentioned earlier a little bit around sort of control, right? In terms of like, because
Mm,
that's one of the big sort of like psychological differences sort of changing between the two, which is, I think in direct debit, I mean, very much it was the the company was in control, and it's like so you trusted the company to then bill you, and then it would come out of your account, once a month,
yeah,
the frequency of it is. Whereas I suppose in VRPs, then you're very much more in control, where sort of you own it, and then you're instructing them to then make the payment to your bank to make the payment to the supplier. I mean, there's a psychological thing which sort of reflects to a certain extent the change that's happening in the consumer world, which is we like to think, at least anyway, that we feel much more in control with the apps and
yeah.
digital sort of technology, don't we?
And I think that's the case for a proportion of customers, not all customers. So I was having this conversation with somebody the other day who I said, I've probably got something like 15 direct debits come off my account every month, I'm guessing. They said their figure was nearer 30. One of the beauties of direct debit, from my point of view, and certainly from theirs, is that it happens without you having to intervene and without you having to proactively manage it. And you deal with issues by exception. And issues are very, very rare. I know sometimes we see them in the media, but they are rare issues with direct debit. But for some people, they absolutely want more control, and they absolutely want to effectively push each payment rather than give that authority to a third party to collect it. So there is a market for VRPs. What I think is going to be very difficult is, let's go back to the very beginning of this conversation, to raise awareness of VRPs, to raise understanding of VRPs outside of niche markets. And one of the challenges to the industry now is, can you put the two things together? Do VRPs have to be a separate payment method? Could we take the real benefits of VRPs around control, around flexibility, and could you work those into a new version of direct debit? Could you do that and build on the awareness and understanding and consumer guarantee and everything else that direct debit has going for it, and actually make one better product rather than two competing products? I don't know.
I mean, it does feel like the whole sort of payment landscape's getting more complicated, not less complicated. There's probably more ways to pay than there were. I suppose the one that's probably going
Absolutely.
down is probably cash, actually, if anything, right? That's the one that's sort of probably most under threat. But it just feels like it's way more complex than ever was, which is quite a lot of process load or process complexity that firms have to deal with, it feels like.
I think so. And I think, certainly in my experience, a lot of organizations are kind of hearing about VRPs. They don't know anything about them. They're hearing some of the hype that it's going to replace direct debits. And, I get calls on that, and you have to kind of talk people down off the ledge type thing. Um, I think there's a place for it. There's an opportunity to maybe sort of combine some of these payment methods. But when you're in the payments industry, it's very easy to think everybody thinks like you do. And you have to put yourself, in my case, put yourself in your position of my parents, for example. They won't understand all the different nuances of all of this and all the complexities of all of this. So I think as an industry, we've been guilty in the past of the sort of build it and they will come attitude. And I think now's the time to sort of sit back and say, not everybody wants online banking, for example. Um, do people need a plethora of different payment methods, or do they just need better payment methods? Can we
Mm,
now improve the ones that we've got that people understand?
mm. And I think last time we were chatting, I mean, of course, direct debit has kept up with the times. And I think last time you were talking about how, the big move from doing, physically signed mandates as an
Yeah,
example to electronically signed mandates. So it's not like things have stayed still to a certain extent. So,
no,
so it's
not
not
at all.
it's
I
not
mean,
all about the new. I mean, even
no,
the old
direct
has kind
debit,
of kept up.
direct debit's still growing. Direct debit's growing by roughly 2% a year still, partly because the number of households and the number of individuals and the number of bills we have is growing. But as I said before, 85% of consumers as a huge figure, actively champion or positively feel positively about paying regular bills by direct debit. It's a real sort of embedded payment method. It's 50 years old, 55 years old, and it's still growing. And the worst thing that we could do as an industry is throw the baby out with the bathwater. It really wouldn't be a sensible thing to do.
I suppose, and a lot of these, it's quite interesting. A lot of these payment methods sort of, they get invented for like 10, 20 years or so before they actually come through to fruition, and we sort of see them as a consumer. What was the product? I remember when I was young, we were talking about contactless payments where you'd, stored charge cards. It was like, what's it called? It began with an M. And it was the precursor for all of basically the contactless payments we see now. I'll put it in the comments when we get to it. It wasn't
I think.
was it Mondo or something like that? It was something like that, and it was around sort of contactless payments and chip payments. I mean, all of that stuff's kind of come in really. I mean, what are the technologies you think we've got to look at today that are probably 20 years ahead of their time now,
Oh,
where we'll
crystal ball.
sort of be in 20, 30 years time?
I don't have a crystal ball, Chris. I really don't. I think we'll need to edit that one out. I can't really. I mean, the obvious answer is AI, but I don't know enough about AI to really sort of apply it to this situation.
I suppose with hindsight, sort of taking that example though, with hindsight, I mean, had you invested in chip payments or, open banking 20, 30 years ago, then you probably wouldn't have made a lot of money. I mean, because it's really sort of happening now. I mean, even though it might have been invented that kind of time, I suppose and maybe the payment sector is a little bit, because it's so volume driven, it's very different from, say, software as an example. You can sort of like get in on the ground floor. It's there's sort of like, maybe there's a slightly different dynamic there.
Yeah, I mean, you're talking about people's money and people's finances here. So we're not buying another. The number of times I've bought games consoles in the past when I was younger, and you move from one to the other because they get so much better, so much quicker. But there's no jeopardy. But with people's finances, there's a degree of jeopardy. It's got to be secure. It's got to be reliable. It's got to be something that they will utterly trust. So any new payment method that's developed now has to clear those barriers. Direct debit had to do it all those years ago. Faster payments would have done it 20 years ago. People have had to, I've made some large payments through faster payments in my time. And you do sit there and you do think, I hope that's gone to the right place.
Yeah.
All of that trust has to be acquired.
Yeah. And the number of times I check the sort code in the bank and the account number, particularly if it's a large amount, right? You sort of really check on that. I mean, I suppose
you almost want to phone the recipient and say, did you get the money?
Exactly. Yeah. I mean, the technology that is, I suppose, in the background, I suppose, is like these central bank digital currencies, which has sort of been, they've sort of been floated around. They seem to sort of ebb and flow a little bit with the popularity of cryptocurrency that's sort of out there and using blockchain and those kind of things. It feels like that might come to something, but it feels like it's probably further away than certainly the media hype might be.
I think I don't have a clear understanding of crypto and blockchain, but again, that feels to me like it's a question of build it and they will come. And, perhaps in 20 years' time, you might look back on this and say, that was the next big thing. I don't know. I haven't got the degree of understanding of the path that crypto's on to understand whether it's going to become mainstream for all of us and in what timescale.
Yeah. So if we take a step back, I suppose, in terms of like what should people be focusing on now? I mean, from a payment space point of view, I mean, what do you think the big 5 things they got to focus on sort of today to really get resolved? I mean, what are the big issues that people are sort of handling or looking at?
Well, in terms of payment options, it's how do we bring open banking to the public consciousness? How do we take the opportunities that open banking is giving us as an industry, but how do we make people feel comfortable about it? How do we make them understand it? How do we make them feel safe? with these new payment methods. How do we dispel the rumours that are out there that direct debit's going to die, which is just not the case. The infrastructure and the products that are out there at the moment have got to be future proofed. There's been recent announcements about the extension of the infrastructure contracts to allow developments to happen without there being any risk, and that's great news. Yeah, I think it's just that. I think it's how do we move from a space where the payments industry is talking about all of these things, and as I said, we're building it and they will come, but how do we get it to a place where it's second nature to consumers who understand these products, they feel safe with them, they're comfortable to use them, and we haven't done that for quite some time. So direct debits predates me. Faster payments, I guess, is the last time that happened 20 odd years ago when that was developed. Online banking, I guess, has had to do the same in terms of people feeling comfortable having their bank account sort of carried around in their pocket. So it's a journey that we've been on before. We've got to go on it again.
I mean, certainly chatting to you is like it's a bit of a realization around, we can be very sort of technologically savvy, or we can be very process savvy, or financially, or those kind of things. But there actually is that marketing lens, particularly technical developments, can get left behind to a certain extent. But just how important it is around adoption and having clear messages, making sure you've got, logos, clear messaging, repeat messaging going out there really to sort of drive adoption. And sometimes it feels like that kind of gets left behind a little bit. Maybe it's got a little bit too left behind recently. And it's something we've got to think about.
The last incidents I can think of that the industry got together to launch a service and promote a service and build awareness and understanding was the current account switch service. And again, I think that's probably about 10 years old now, but they're still putting campaigns together to make people understand that you can switch current accounts, that it's a competitive market. And I think the newest campaign was just launched recently in the last couple of months. So it can be done. The industry can sort of coalesce around a clear objective, which is, to make people believe that something is credible, safe, usable.
Well, Mike, thanks very much for making the time. I appreciate it. And as I say, I've had it was a real eye opener for me just thinking about the branding around direct debit and then how that kind of links to open banking particularly, and how that kind of can link together. So I really appreciate you making the time to chat to me.
It's been a good chat. Thank you, Chris.
Thanks very much.